All right. So having let me see if I can find it. Right, so I'm recording anyway. So for my day trading technique, I will look at when the session is opened, okay? And each and every day gives different market condition or ways of looking at the market. What I have over here is the Asian session. So I want to know what actually happened in the Asian session, all right? And then I want to know what happened in the London session, which is this cyan color. And then I want to know what happened in the US session, which is your session, which started from this area. All right. So when one thing you have to bear in mind all the time when the market opens is the first 30 minutes of any market open, things get shaken up a bit. And I'll explain. When London market opens, let's say price moves down like this, okay? When it gets towards the US session, you can see that the price move up like this. There's a reason why this occur, why it just doesn't continue like that, all right? And one of the key reasons why this occur, which if you pay attention to, you will gain an understanding. Look at this movement over here, all right? The price moves down from this high of 1093 to this low of 1019. And when we look at that, that is about 70 pips, okay? That's a quite big, massive move. But as soon as we are getting closer to the US session, the 3:30 minutes just before the US session, you can see that we start to move up and then we move up, we move up. And the way that we move up on this particular day, we did not even do what this first 30 minutes did. You get where I'm coming from on this moving up. What that is suggesting to me based on experience and time is we are only taking profits, okay? We are only taking profits and we want to take profits before the American session opens. And when the American session opens, we will make further trading decision. All right. So the first 30 minutes of the US session opening, this is a day trading technique, right? Is I'm going to look at this 30 minutes and then that 30 minutes. That is the first 30 minutes. Okay. And obviously I would have done what I've explained to you before in terms of understanding the trend. All right. So I know that the trend is down and my direction in which I want to take my trade will be down. All right. If you are using a small size, then you can capitalize on this opportunity. If you are using a big size, sometimes something might occur, which might be beyond your power if you do not know whether there's any support in this area. All right. The first 30 minutes, the second 30 minutes, I'll let that occur. And then the third 30 minutes, I want to see the break of the range in the direction which I have specified before. So if my direction is to the downside and I'm seeing the range breaking down, then I want to start selling at that particular point in time. My stop would be just above here. All right. And then that is me done for the day. And that is the simple way in which I look at day trading. I have to start just before the session and looking at how they are playing the session opening. Once I see how they are playing the opening of the session, which I know that things are going to first get shaken up before the actual move, as usual in some cases, then obviously once the actual move now begins, then I can capitalize on that move and take advantage of the move to the downside. On this particular day, that's about 215 pips. Usually, I'm looking for about 10 pips in one standard loss. So my 10 pips could have occurred on this particular candle, and that is me done for my day trading. I've achieved my day trading objective, and I'm moving on. If I decide to leave a little position, right, out of the standard lot, that will be for position trading to capture the rest of the move. Okay, and that is it, done for me on my day trading um on my day trading objective. Having said that, there are some days whereby price may not come as simple as this, but I will still first of all have to wait for the open range. If the open range is breaking against my direction of the major trend, right, I'll be cautious in taking that trade. That doesn't mean that I won't take it, because look at on a day like this. So with the day trading technique, I can still trade against my direction. But when I'm trading against my direction, I'm not looking for so much of a move, right? And I have all these moving averages to align me in knowing when that move is probably it's outdated and I don't need to be in that move again. You know, there are other little techniques that I look into to align myself into it. But obviously, my day trading technique, I'm not looking for so much. I'm looking for just a little, and I want to do it during the sessions like London session or US session, when I know that the volume will help to move price away from the 230 minutes when the market opens, break the range to the upside or to the downside. So I'm not too keen on which direction it breaks, because I'm looking for just a little peep, right? And then obviously once that target is reached, discipline is leave it and do other things. If I'm looking for a position trading or a swing trading objective, then I can then look into one or two other things to make that happen. All right. So I know it's a bit I don't know if you manage to gain anything whatsoever, but obviously always here. If you have any question to ask, please do not hesitate to ask them. Either you leave me an offline message, or you can even ask me now before I sign off. I only want to do like a 30-minute session for the guy in question, but unfortunately, for one reason or the other, we are having technical difficulties and getting him in. So if you have any question, don't hesitate to ask me now before I sign off. I'll try and send the recording to the class.
Okay, yeah. So the maximum that you can do is 100. Is that what you're saying, or?
Say that again.
So is the maximum that you can get out of the day trading is 100? Is that what you were saying, or?
No, you can do more than that. I'm just using my own you can definitely do more than that. Everything depends on the lot size that you are taking, right? So me, what I'm saying to you is that is the on a standard
Objective.
lot, right?
So you're saying that's your goal for the day.
Exactly. That is my goal for the day on a standard lot. So if I'm doing 2 standard lots at 10 pips, that will be probably £200. If I'm doing 10 standard lots, right, at 10 pip, that is 1,000 pound for me in a day. You get where I'm coming from. So everything depends on, I'm talking based on a small capital perspective, and then based on a small trading size and perspective. And even for some traders, one standard lot is too much based on the capital that they have, if you get where I'm coming from. So everything depends on the capital that you have, and everything depends on the lot size that you are taking. So obviously, if you're taking 100 lots based on this strategy, and then you are looking for 10 pips, that will be 10,000 pound per that particular session. if you have an account that can withstand that.
So what is a PEEP?
Right. So a pip is the unit of movement of any currency pair. So, and each and every currency pair depends on their exchange rate. Their pip value is different. So, say for example, now, if I go to this tool, you can actually see what the pip value of each currency pair is. Some of them are $10, some of them are lesser than $10, some of them are about $7. All right. So let's say, for example, for Aussie card, the peak value is about $5. For Aussie yen, the peep value is about $7 per peep. For things like pound dollar, let's say pound dollar. Oh, there's a place where we can see peep values. Bear me a second. Everyone is peep. Everything depends on the exchange rate.
Okay. So the PEEP is in a minute or a second? How is it?
Say that
The
again.
time limit. The time limit for a PEEP
Oh,
is how long?
there's no time limit for a peep. A peep, which is the unit of movement, is let me show you in a market that's moving. Let's say, for example, it's just an example. It's not going to be the actual the way of this. So let's say Bitcoin USD, that's the market that'll be open right about now. All right, and let's say we are looking at price, and the current price is 19,041.00. So when this managed to, and you can see the time, this is 40 something seconds, price still hasn't moved for whatever reason. So PEEP is not big. All right, so the price has moved to 049 now. This is a lot. This is more than a PEEP, because the PEEP is going to be this 00 at the back. You get where I'm coming from? Let's see another Bitcoin chart that's not USD. Bitcoin USD. Let's see Bitstamp. They probably. All right, so the PEEP is in 0.00 at the back for currency, right? So if this moves, say 50, let's see what it moves now. Let's see if it moves up. So the time has just finished. All right, so it moves to 74 from 50 something. That's about 300 pip, 200 pip move in one go. Are you getting my point? So the pip starts at the back, not even this 73. So all right, so it moves from 73 to 79. So that is about 600 pip movements in terms of currency. This is not in terms of Bitcoin now. That's about 600 pip move that's just occurred on Bitcoin if we are relating that to currency.
Yes.
Right, so that is a PEEP, and then sometimes that PEEP value, let's look at it in all right, so position size, if I do 0.001, this is how currency is calculated, because you can see over here that 0.9690, the first 4 digits starting from here, starting from that 0, that is a PEEP, right? The last 2 ones over here are pipettes. Those are not actually a PEEP. Let's look for pound. All right, so usually the last 4 are the ones that is where a pip occurs. So when you look at this now, 1.0856, right? So currently we have about 856 pip from zero. That is where the pound is. So the units, I mean what's one pip? So if this moves to 1.0857 now, that means the price has moved one pip, and that one pip can be equal to maybe $1 or what's it called, or 10. Sorry, that one pip will be equal to say about $10 or so. Hello.
Alpha, ṣé ó ti wà online?
Láti ẹ̀ẹ̀kan èmi máa close nísìn mi ní time mo ti ń lọ. So as I've said, 1.0856. If it moves to 1.0857, that is obviously one pip up, and that might be $10 or £10 up. Say for example, let's say this is position size 10, and 100 lots will be, and then 100,000 will be the standard that I'm talking about. All right, so if I'm trading one contract, which is 100,000 units, the peak value in dollar is 10. So if this moves from 1.0857, that means I've made $10. But that $10, obviously, the brokers will take out their own commission, and then maybe I'll be left with something less than $10. So when it moves to 1.0858 now, then I can make it 10 full dollars plus whatever is left from what the broker takes out as their own commission. If it moves to 1.0860, then I will make 30 full dollars plus whatever is left out of what the brokers take out of their own commission from the first pip that I make. All right, so that is the way the pip is calculated, and for different pairs is different. Let's say dollar card is still 10 because that's a dollar pair. If we go to things like Euro New Zealand, pip value is still 10. There are some currencies like Aussie card or New Zealand card. Pip value on this as well is I'm looking for things like Aussie, New Zealand. There are some currencies that their pip value is all right. So for Aussie, New Zealand now, the pip value is 5.7. It's not exactly up to 10, if you get where I'm coming from. And some currencies will be up to 10. Depends on their exchange rate at that current point in time. Go on. Hello?
So, what do you think is better comparing to crypto, stocks, and foreign exchange?
When do I think what?
Which one do you think is better to make more money?
To be deadly honest with you, there's none of them that's not better. Everything depends on your strategy, and not just your strategy alone, the kind of understanding of psychology you have at the back of whatever you are trading.
Okay, thank you.
No problems. So I'll please, if you do have any question, don't hesitate to send it across to me. I will try and answer you as soon as possible. For today, I'll be going, and then I'll catch up with you in a bit. Thank you so much for your time at the same time.
No worries. I just have one question.
Go on.
Yeah, like the foreign exchange, the forex, is it like the whole week and it has time? Like,
yeah, from Sunday.
It starts on
about
Sunday.
10 GMT to Friday, 10 GMT.
So they don't work on Saturdays?
No,
And that time, is it like 8 hours or how is it?
24 hours during those period.
Or 24 hours?
Yeah, from Sunday to Friday, 24 hours.
Oh, okay.
But
Okay.
obviously, different currencies move with different speeds. Some currency moves very slow and some currency moves very fast. Some currency moves a lot of range in a day and some currency moves much smaller range in a day. Like all this currency now, Aussie card will move about 67 pips in a day, while you have currency like pound yen that moves about 178 pips on the average in a day, you know. So you can choose whichever one you like, whether you want something that moves very fast or something that moves equally very slow. All right.
Yeah.
Go on.
And then you said when it opens, like, do you like if it works 24/7, then when it opens?
It opens from Sunday 10 o'clock
Oh, okay. Sunday, 10
GMT,
o'clock.
between 9 and 10
Okay.
o'clock GMT when the Asian market opens on Sunday, right? And it closes at about 10 o'clock on Friday. So Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. That's how many days it takes to open.
Oh, okay. Okay.
All right.
Got
I'm
it.
gonna call it a day for now. I need to quickly go and check some few things and then we
Sure.
can chat on Telegram. All right.
Okay. Thank you. Thank you
You're
very much.
welcome. Yeah.
Bye.